Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week we saw the S&P reach all-time highs again. So this is 2 weeks in a row that we've seen the S&P reach this new level. So we're up 1.23% this week, which brings us up 4.75% year to date. And feeding these thoughts and really the long discussion that Rich and I, or the lion's share of what we're going to talk about today, is this idea of, are stocks in a bubble right now? Is the equity market in a bubble? Is it a rational bubble? Does it make sense? And then the other bit that we couldn't not talk about, since it was such a big market mover, now not in regular equities market, but Tesla investing $1.5 billion in crypto, specifically Bitcoin, and what that does for the market and potentially cryptocurrency going forward. But before we get into that, we're going to talk about where equities currently are and what we see. And it's kind of exciting because Rich and I have two very different opinions on where the market is and whether or not we are in a bubble. So I will say this, my opinion is, are we in a rational bubble? I would say yes. So what makes a bubble rational? Now, for me, we've seen a massive run up in equities over the past year. Now, we haven't seen inflation in regular consumer prices, consumer goods, but where have we seen inflation? We've seen inflation where the money has been going, and that's in the equity markets. So over this past year, what's happened? The Fed has just pumped, and the Fed and the fiscal stimulus, both of those together have just pumped so much money into the system. About 25 to 30% of all dollars that are in the economy right now were produced last year. So that's going to create inflation, but maybe it's not creating inflation in regular consumer goods. Maybe it's creating inflation where the money is going, which is into the equity markets. Now you couple that with super low interest rates. Now, what does that mean? It means fixed income. Who's going to say, oh, I want 0.4% on my bonds? Who's going to put all their money in fixed income when instead you can just put it in the market in equities and see it take off? And so the question on whether we're in a rational bubble, I think absolutely. We have rationally inflated the prices of equities. Now, for me, the more interesting question is, do we see this bubble bursting? But before we get there, Rich has a very different opinion on whether or not we are in a bubble. And so it's a little bit interesting. The floor is yours, Rich.
Thank you, Knight. And it's my opinion that you can't have a rational bubble because a bubble in its understanding, or at least my understanding of it, is that people are acting irrationally and that you have valuations that are not in line with rational thought, like the big famous one of the tulip bubble back in the 1600s. Here, what we have, and you brought up an excellent point about the amount of money that we have has increased by 30% in a very short period of time. And that has created inflation, which you would expect because you have a lot of money chasing fewer assets, or a stable amount of assets, which is stocks, and it's jumped. Interesting enough, usually when we have these type of bubbles, we have a very big increase in home prices, automobiles, and other things, but we haven't seen that. We've just seen it in, as Knight has brought up, in financial assets. And when I look at Knight, when he was talking about his statement on rational bubbles, if you go in on the definition of what is a bubble, and I just pulled up something from Investopedia, and it says a bubble is an economic cycle that is characterized by the rapid escalation of market value, particularly in the price of assets. Typically, a bubble is created by a surge in asset prices that is driven by exuberant market behavior. To me, the exuberant market behavior is the part that I think would be irrational. The other part that goes with this bubble, and part of the definition, is A basic characteristic of bubbles is the suspension of disbelief by most participants when the speculative price surge is occurring. It's only in retrospect, after the bubble has burst, that they're recognized. So in this part of the definition, they broke out 5 stages of a bubble, which was displacement, that's a rapid rise, the boom, that's what we would be seeing today in stock prices. And then there's this euphoria that, everything is doing great. Right after that, we see some profit taking occurring, and then there's a total collapse in the market and the panic sets in. Now, if this is irrational, or if a rational bubble was even possible, in my opinion, then you wouldn't have the euphoria, and you wouldn't have the panic at the end. So for that reason, I don't believe that definition is possible, but there are economists who say it is. I just don't believe it. I think right now what's occurring is we have a very predictable rapid rise in assets due to increase of our money supply combined with very low interest rates, which have been kept there by the Federal Reserve. And that combination is why we're seeing such a rapid rise in equity markets. And until that begins to slow down and stop, I think it's going to continue. And I think when the pandemic is over, or we're further along with the vaccines, and we start to see more of the economy opening up, if we have large profits and large profit increases, then this is very justifiable and it's not a bubble.
Yeah, no, I think that makes a lot of sense. And whether or not you, at the end of the day, whether or not you terminology, use it, call it a rational bubble or call it, just a underlying, it makes sense why assets are this way. I think the biggest and more important question is, what are we going to see in the future? Are we going to see this massive sell-off? And what could potentially be one of the market indicators that we'd be looking for? Now, the first thing that comes to mind for me is, well, where are the assets going to go? What would be the catalyst for such a sell-off? And now we have seen bond prices rising, and in some ways, bond prices rising actually might be a good thing. It's indicating that the economy and the bond market is actually expecting for there to be a full recovery in the market. So in some ways, bond prices rising is good. And knowing that they're going to be capped because the Fed is going to keep interest rates relatively low, which is almost constantly going to be pulling down on how high those yields can really go. So, and the Fed has already said they're not going to move away from that number, for at least, likely 2, maybe 3, maybe longer. Now, one thing that we can't not mention about it is, what's another reason why they're keeping rates so low? We have such a high amount of debt right now. What would happen if rates went higher? How would we start paying off that debt? So in some ways, part of the reason why we can pump this economy so full of money is actually because rates are so low, so we can currently afford it. Now, Powell has said, in the moment, we have the ability to pay off this debt, pay the rates on this debt. Now, let's not focus on our deficit while we're in the middle of a pandemic, which I agree with. But as we go outside and start recovering, I do believe that we're going to have to start paying down this debt that we have before we ever start to raise rates, because otherwise we're going to wind up in a more negative situation in the future. So off the top of that, basically money's not going to go into fixed income is what that is. Now, are there other places? Rich, one thing that I would say about, we have seen a massive increase in real estate. So we have seen a massive increase in other, assets. So I do think that the bubble might be expanding over, and I do think we have seen a lot of money going into real estate, but is there going to be a massive catalyst that brings down the market? And I'm just not seeing it. I think we're, again, with everything on the horizon of positive news on, vaccine front, more positive news than before. The only thing that I would be paying attention to, and Rich, I know both of us are, these new strains and what does that have for a potential new economy. And let's say we do have to get vaccinated every year, which is potentially on the table. Does that reduce the future for certain industries? Absolutely. Does that maybe destroy the whole economy and where the stock market is right now? I don't know. Amazon just had its best quarter ever. And obviously it's helped slightly by the pandemic, but I don't know if we see a massive burst or collapse in the market.
And my belief is that if it follows, as you said, where we just have to do vaccines annually, we've dealt with that with the flu, and we know that we can handle that. It's if we have something and we can't figure out the vaccine and it runs through, like we saw in the beginning of the COVID-19 pandemic, that we're going to have a major problem. I don't foresee that, but you never know.
Well, talking about bubbles, bubble this, bubble that, what about Bitcoin? Are we in a bubble with Bitcoin? Tesla just bought $1.5 billion of this cryptocurrency. What effect does it have on the market? We saw it rise from almost, mid 30,000 to now about 50,000 a coin. You have Kathy Wood over at ARK Invest saying that Bitcoin could reach 500,000 a coin. What are your thoughts? Whether you believe in cryptocurrency or not, one thing that it's impossible to say is it's not becoming more and more legitimate with these companies buying these massive amounts.
Yeah, I agree. I still think it's speculative. We've seen but you can make a lot of money during the speculation.
Yeah, well, one thing that I'm interested in, and this is more I don't fully understand how Tesla, here's the bad part of Bitcoin and for potentially even Tesla. What are the regulations going to be around, Fortune 500 companies buying Bitcoin and having that as an asset? But one thing that I find really, really interesting, when they came out in their note about it, they said, if Bitcoin price goes up, we're not going to mark up on our balance sheet. But if Bitcoin price falls, we are going to mark down. And from taxes, to be honest, I don't understand how they're allowed to do that. It sounds like it. I mean, that sounds like a win-win scenario. So is this all just like a massive tax play? What are they doing here? How is that even possible, Rich?
Well, one is what they do for financials and what they do for taxes may be very different because they may be forced to mark it up for tax purposes, even if they don't mark it up for financial purposes. So, and I'm less interested in what they say in their press releases and much more interested in what they'd have on the tax return.
Gotcha. Well, that's interesting. I did think that was a fascinating play. And my thought was, well, look, if what they're claiming they can do is realistic, we're going to start to see, all the other Apple, Amazon. And then if that is the case, legitimizing a currency, in which case there are a lot of benefits to it. But I do think overall right now we are seeing a difficulty in the market of regulation. So you have a lot of regulatory risk. You have a lot of, how do you even trust what you're buying to be Bitcoin? So there's a lot of issues that come around the purchase of it and it becoming it's certainly not a safe asset, I would say, to place your money. It's very volatile, but is it a speculative play? I don't know. I'm slowly coming around on, I'm not sure if I would call cryptocurrency speculative. I would call it volatile, but I don't know if it's speculative anymore. Either way, we've definitely gone on for a while, but we thought that these two pieces were very interesting. It's something that's been talked about a lot, and we wanted to share it with you guys. So if you enjoyed it, please give us a like, hit it down below, subscribe to our YouTube channel. We have new content every week, and we appreciate you. As always, we're here to support you. Your money's here to support you, and we'll see you again next week.